Hello, and welcome to the third part of a three-part series of how to make successful export sales by diversifying your markets. Peter Harriman, I'll get into who I am a little later. As I said, the purpose of this presentation of a three-part series is to kind of help you understand what the market is of exports. I find with small businesses, it's real easy to kind of go through the question and say, hey, I want to export, but how do we actually start that process? So in part one of this series, which the recording is available, we kind of went through some of the basic reasons that you would want to export, the need to plan for exporting, and we went through a business plan, which we'll hit up again at the end of this session. And then we really talked about, finding your market and understanding some resources that were available to you, which led us to part two. In part two, we had the Maine International Trade Center come on, and they went through some common terms, common costs, and just who they were, because they are one of the best resources in Maine to get in touch with when you're thinking about importing or exporting. Again, recording is available for that. And in part three, this part today, we're going to go through more of the financing part, looking at how to get the deal, looking at some programs that are out there, and talking to a bank that has done deals in Maine. So they have the hands-on experience of actually having done this. And then, as I said, we'll very, very briefly end by just relooking at that business plan and how the international aspect changes it. A copy of these slides can be available upon request, and after the presentation, we usually send them out. Its presentation is being recorded, so we'll put that up on our YouTube channel as well. So who am I? My name is Peter Harriman. I am the Portland Center Director and Certified Business Advisor for the Maine Small Business Development Center. What does the Maine Small Business Development Center do? We are a free business advising service. We are advisors, so we can't do it for you, but we can certainly help you with business planning. We help startups. We help clients who are already in business. We help with importing and exporting, trying to understand what the next steps are. We can help set up financial statements for you or understand them. You name it, we do it. And we try to keep abreast of the most current situations that are happening in business. So most currently we had, the economic injury disaster loans, the PPP loans, the Maine Economic Recovery Grants, the Community Development Block Grants, the Shutter Venue Operating Grants, the Rural Restaurant Revitalization Fund, and LMNOP, right? We had a lot of things happen in this last year with the COVID epidemic. So we have embraced it. We are your source of information for the most up-to-date business advising. We have great YouTubes that we're doing that really hit up on some of the most current aspects of, do I want to do online marketing and how do I do online marketing in financing and export and import like this one. So what we don't do, as I said, is provide tax, legal, or accounting advice. Oftentimes during our conversations, so when we're having an advising session with a client, I will say, okay, at this point, you really need to talk to a lawyer, right? I have helped run businesses, I've run businesses, and I have a lot of education along with all the other advisors that we have with the SBDC, but there is a line that we cannot cross. So we are just advising. Our advisors are located, we cover 21 locations throughout the state of Maine. With COVID, we are mostly working from home these days, but after we are back in the offices, more than likely there is going to be an office somewhere near you, right? So I highly suggest to reach out. The easiest way to get in touch with us is to go to our website up top there. And on our website, there's a request advising button in the top right. That is the easiest way to get in touch with us. And we'll usually get in touch with you fairly quickly once you request advising and fill in the request. So without further ado on me and who I am, we're going to go on with the show, right? We have two people from Camden National Bank, and we have someone from the U.S. Small Business Administration who are going to talk today about the financing aspects. And I don't want to steal their thunder, so I'm gonna stop sharing my screen and I'm going to let them take over.
Hi, I'm Barbara Raths with Camden National Bank. I am the I am the Director of Treasury Management and Government Banking, and I'm also the International Treasury Specialist at the bank. I've worked for a while in Treasury in all aspects of moving funds and accounts, both domestically and internationally throughout my career. And I help clients at Camden National Bank try to figure out how funds move internationally cross-border. I'm joined by my colleague, Donna Erler. Donna?
Hey, I'm Donna Erler. I am the Director of Commercial Banking, technically for the New Hampshire region. However, Barbara and I work together for international banking clients. I have been in banking, I hate to say this, for 38 years, all doing every type of commercial financing available. So we are going to try to help you today decide on mitigating some of the risks that go along with international banking and some of the programs that you can use.
Excellent. Let me just take us through the agenda. It's going to be brief from us. I want to talk first, we're going to talk about fraud prevention, verifying that an international order is legitimate. And then we're going to also talk about credit and guarantees. How do you prevent risk of non-payment? What questions will the bank have for you about financing international business? And then what questions you should ask your bank. Donna and I are bankers, so we're going to help you through that process and give you sort of the inside scoop so you can be prepared when you talk with a banker. What I want to talk about first is fraud prevention. This is all over the news in terms of people are used to hearing words like cybersecurity and fraud and malware, right? And unfortunately, fraud in all kinds of banking and financial transactions is increasing. How does this relate to international? I really wanted to highlight this at the beginning because sometimes we have clients call us to say, hey, I just got this big international order. I'm so excited from my website, or I just got this email. And I got to talk about financing right away, or I need to wire someone some money because of this international transaction that I'm involved with. Perhaps you've heard about some of these scenarios, or you've experienced this type of solicitation, right? Where you get solicited to say, hey, look, we'd like to do business together, and now we want either money or information. So we hope that you have great success internationally and that these opportunities are legitimate. But I first want to just caution that what you want to do is take a pause when you see something come up to ask the question, knowing your international customer, right? What is this opportunity? And before you kind of get too excited and move too fast, just put on, your sense of your best practices, right? Same thing's true for domestic, right? Just, you're going to say, does this make sense? Does this order make sense? Is this person, how they found out about my company, really, in terms of, and their order size and what they're asking me to do and what information they're asking me for make sense in my particular marketplace? Is there a sense of urgency that's legitimate? Are they asking me to do something very fast that involves sharing money or information? What does the origin of the contact make sense? Like, did someone from the Maine International Trade Center refer them? Or did somebody else who I do business with refer them? Or are they just claiming, well, we just saw you on the web and we're just reaching out from a foreign country because we hear about your great business here in Maine? Here are some tips of how this is a question I get a lot. How do I know, how can I feel comfortable, in terms of with international business? We talked a little bit, the Maine International Trade Center for Maine is a great resource, as well as the U.S. Commercial Service. You can call either of them and ask about the international company, and ask for an international company, the profile. The commercial service, right, the Maine Commercial Service, they have people located in country that can research companies and help to get a sense of, is this legitimate? Does this make sense for this particular country? And do that research for you. So that's a great place to go to say, hey, let's find out if this is legitimate. They also are aware of common international scams. So great resource in terms of who to touch base with. It's also important to educate yourself about how business is conducted in a particular country, just in general, right? The requester of the business, the opportunity might be legitimate, but there may be some things about doing business in that country that you need to be aware of. There are great online country commercial guides. And here's a link for you that you can, and it has every country and it talks about what the aspects of doing business in that particular country. The other thing that you might want to do is screen potential buyers and end users to comply with US regulations. And they have a screening list, and that's also a good thing to say, who exactly am I doing business with? And are they able to do business with me legitimately, legally, and to try to screen for some of those flags. So not to start with with scaring you, but there are some, I want you to be able to feel confident in who you're doing business with and knowing your international customer. And here are some tools to be able to help you get comfortable and get past that. So we're going to talk now about credit guarantees. Donna?
So now that you've established that the request is legitimate, the next thing you need to consider is, how am I going to mitigate the risk of non-payment? And there are several vehicles that you can use to do that. The first one, Barbara, if you'll change the slide. The first one is that you can ask your buyer to provide a letter of credit. This is usually recommended if you have a very large order, if you're working with a new relationship, you know, it's a first-time order, or you're trying to increase a fairly new relationship, or if your product is more customized than standard. These are times that you might do this. There are a lot of advantages to this. You know, it places more risk on the importer than it does on the exporter, first of all. You're relying on the bank, on their bank's credit versus the buyer's credit. They are going to have to go to the bank. They are going to have to apply for this as they would any type of credit vehicle. A letter of credit is looked at the same by a bank as a request for a mortgage, for a term loan, for a line of credit, and it's going to be underwritten in the same way. Because the bank is on the hook for paying that if the buyer does not pay it, it is considered a traditional credit vehicle. Because if they don't pay, the bank is going to send you the money, but they are going to then establish a loan with your buyer that they have to pay back. So they're going to be looking at the buyer's ability to pay that, that loan in the traditional terms, in terms of cash flow. One of the disadvantages to it is that it is time consuming because of the need to underwrite that as a line. It is also, you know, somewhat expensive. Typically, a bank will require 1 to 2% of the amount of the line as a fee to provide that. If you're in competition to sell that product and your competitor is not requiring a letter of credit, you know, this could be a disadvantage to you. The other thing that you have to be very careful of is that the documentation required for an LC has to be complete, and it has to be absolutely accurate. If it's not, that could delay your funding, your payment, and it could even prevent you from getting paid. So all of these things have to be factored in when you're thinking about using a letter of credit. Something that you might consider other than a letter of credit is documentary collection. This is less labor intensive, it is more convenient, it is less costly. It places more risk on the exporter than it does on the importer. If you look at this, this is a method where your bank, the exporter's bank, provides documents to the importer's bank. And then they will collect the payment for the shipped goods. As I said, it is more convenient, it is typically less costly, but you don't get the benefit of a guarantee from the bank. You don't get anyone verifying those loan documents. So you do have limited recourse in the event of non-payment with this. But, used for smaller orders, used for orders that you are comfortable with the buyer, this is a good alternative. A third alternative, if you'll flip to the next slide, Barbara, is trade credit insurance. We often recommend this to our customers to use. Trade credit insurance works by insuring you against non-payment by your buyer on every invoice that you are doing with that customer. It's covered, during the terms of your policy for the full amount. It helps you. One of the big advantages is that it helps you to sell more to your buyers, to safely sell more. It also allows you to expand your market, to work with new relationships that you might have otherwise deemed too risky in the past. It's a great product. It reduces the risk of non-payment by your foreign buyers. It can be used as a one-time transaction, or it can be used on a series of transactions with a customer. It really mitigates the loss most are willing to take to build business relationships. One of the other advantages to it is it may allow you to have access to more capital. Banks love it when you have trade insurance. You may be able to get a higher percentage of your accounts receivable base on your draws on lines of credit, providing you, maybe instead of a 70% advance rate, you may be able to get a 75 or an 80% advance rate if you had trade insurance. You need to understand that it probably does not cover 100% of the invoice. Typically it's between 75 and 95% of the invoice, and that's due to a number of factors. What country is it? What type of goods you're doing? A lot of things play into it. It can be costly. However, and Joe is going to cover this in his presentation, recently the premiums have been added, or a portion of the premiums have been added to be funded under the STEP grants, which Joe will go into when he talks to you. You can get this from two sources. You can use a private company, or you can use the government bank, XM Bank. So it is a great product to use. Barbara?
So your bank is also a partner in your trade efforts in terms of supporting your exports. So you're going to want to look at, when you go see your banker, when you kind of understand, okay, this is the deal I have in front of me. You need to prepare for questions, that you're going to ask your bank, and then the questions that the bank's going to have about your international business. So here are some questions that you're going to want to ask your bank. Do you have international banking services? And by that, do they support international payments? Do they support trade finance? Do they work with, are they an XM, import bank, designated lender, right? Do they participate with the SBA? Because you're about to hear there are lots of SBA programs that help support exports that if the bank participates with the SBA, they can tap into. One of the things for payments is you want to know that your bank has a SWIFT code so that you can receive international US dollar payments into your US dollar account, right? How are you going to be paid, and what are the terms of the deal with your customer? You want to make sure that you can get paid into your bank account, and a SWIFT code allows international payments. Even if they're in US dollars, they're still considered international payments to get into your bank account. So ultimately you want to get paid. So this is very important. Sometimes as part of a deal, you'll be paid in foreign currency. So you're getting paid in euros, but the euros can't go into your US dollar bank account. So you need to have an ability to facilitate a trade, right? You convert euros into your US dollars. And so that's a question to ask your bank. If your deal is in foreign currency, do they have a mechanism to be able to trade foreign currency for you? Otherwise, what will just happen is the payment will get, they'll try to send euros into your payment, your US dollar bank account, and it'll just be rejected, and it'll be lost out there. So you really want to clear up these things in terms of making sure that you have the infrastructure in place to get paid. And then if you're going to get paid in foreign currency in the future, can you lock in the exchange rate in advance or do a forward transaction? So obviously currency values change. The market is volatile. It goes up and down in terms of how many euros per US dollar, or how many pound sterling, or how many Canadian dollars, something. And so in order to lock in to control volatility, if you're getting paid in foreign currency, you may want to have a contract that locks in the value so that you don't lose the value of what you're invoicing for. So those are some great questions to ask your bank. Donna, what are you going to ask a customer?
We're going to ask a lot of questions. And the reason for that is because it's, the answers to these questions are going to determine how the bank is going to structure your credit facilities. Typically a bank, if you have a great deal of foreign receivables, a bank is going to want to separate that from your domestic receivables, and probably run 2 different lines of credit. But, that's all determined by the questions we're going to ask you. First of all, so what portion of your business comes from exporting? That's going to be a big determining factor. What are you needing to finance to export? Is it labor? Is it raw materials, supplies? What do you need to support that? That will determine, and again, Joe's going to go into a lot of it, what category of loan support that you're going to get. There are a number of programs. You might be a XM Working Capital Guarantee Program. You might be an SBA Export Express program. There are a lot of programs available, and they'll be tailored to what you're looking to support. Is your importer requiring a performance letter of credit? We went through that. What terms do you need to be competitive? That's going to be a big factor. How quickly are you going to be able to issue your product? What are you going to require from them? All of that's going to play into that. Are you looking to finance a large order, a one-time order, or incremental export sales? That will determine the type of line of credit you're going to get from the bank to back this up. Is it going to be a straight line, or is it going to be an advisory line where you can use multiple advances? What kind of terms are you going to get? Again, we talked about methods to secure your loan payment, letter of credit, export credit insurance, government guarantees. Are you going to go through the XM Bank, or are we going to use SBA programs? The risk of transaction, that is very important. What country are you dealing with? What type of foreign currency? A big one for every loan, domestic or international now, the bank is going to ask you, what is the COVID impact? We require a COVID impact statement for every loan that we make. You not only have to consider COVID impact on your company, do you have a labor shortage? Are you having difficulty getting supplies? So we're going to want to know who your suppliers are. What are the problems? We're going to want to know who your buyers are. Are they having problems in payment? Transportation is huge right now. There's a delay in getting supplies. Costs have gone up, depending on what industry you're in. The bank is really going to want to know these, because the more that we know, the better we can help you. We want to tailor the program to you. We don't just want to hand you a product and expect you to live with it. It's very important that we structure whatever we're providing around what you need. So, you can be impatient. I understand that, customers think that we ask for too much. But really, the better that we understand your business, the better that we understand your operating cycle, that allows us to be really of good service to you and to supply the product that you need.
Thanks, Donna. Sometimes I think the best thing that the bank can do for you is to ask questions and to get you thinking about risk, in terms of taking you through all that and how to manage that particular risk.
Yeah, I'm sorry, Barbara. I was just going to say, we want to understand the workings of your company.
So I've added our contact information. I'm a Senior Vice President, Director, Treasury Management, International Treasury Specialist. And Donna is the Senior Vice President, the Director of Commercial Banking, who Donna's expertise is in international transactions. So if there's anything we can do to help support you and your business, or if you have any questions or want to run something by us, please don't hesitate to give a call.
Yes, thank you. And I can say in Maine, Camden has been awesome to work with for small businesses, especially in the international export and small businesses in general, but also for in particular import-export transactions.
Thanks, Peter.
I appreciate that.
Yeah. And now we're going to hear about the products that were mentioned in your presentation from the SBA.
Hey, good morning, guys. And Donna and Barbara, great presentation. Always enjoy working with you guys. So I'm going to talk a little bit more about SBA programs and financing. My name is Joe Raycraft, and I'm the Export Finance Manager for the New England region. And I started with the SBA just over a year ago. I come from 20 plus years in commercial lending and also have a background international roles with manufacturing companies and commercial lending. So my role as an export finance manager is really to work with lenders throughout the region and also directly with exporters, just to help promote the products, and also to help work with the banks to structure deals that make sense and fit within the SBA's export loan programs. I'm going to start this slide off with just to kind of put Maine small business exports into context. And I think Peter probably covered this in the why export section, but just figured it was a kind of an interesting slide. You can see, and these are actually 2020 numbers, 2.4 billion of export sales from Maine, of which over 1,500 were associated with small business exporters. And there you can see the various sectors, no surprises there. And then some of the top markets where Maine exporters are selling to. You can see, small businesses represent over 50% of the overall exports from Maine. Just overall, I think 2020, the numbers are, I think Maine is down about 11% in its exports, which is pretty consistent with the US. I think overall the US is down about 13%. But Maine represents, I think, right around 5% of New England exports. So today I'm going to talk about three things pretty much. First, kind of, what's SBA's role in commercial financing and some of the general kind of eligibility requirements. And then I'll give an overview of SBA's services and our export loan programs. And those are, Export Express, Export Working Capital Loan, and International Trade Loans. We'll do kind of a deeper dive into the Export Express program, because I think that one is most relevant to small business exporters. And then we'll do a couple of case studies of two actual transactions that were done using the Export Express program. And Barbara and Donna will be very familiar with one of the cases because they were involved in that. And then I just provide some contact information for various resource partners that are available to small businesses in Maine. So just in terms of SBA's role, we're not a direct lender. We provide loan guarantees to lenders for loans that small businesses apply for through their banks. Like Camden National. Camden National is an SBA partner bank. So SBA is basically providing a backstop on loans that lenders typically can't finance on their own due to certain credit weaknesses that the company may have. And those could be, any one of these five or, others that the bank notes. So collateral shortfalls is very common. SBA is a cash flow lender. So, for a service type company that doesn't have a lot of assets, a cash flow is really what the SBA is looking for. We want to make sure that there's an ability of the company to repay the debt. Kind of higher risk loans, maybe like a business acquisition, startups, new franchises. those are areas that are difficult for banks because there's not really a track record there. So those are good reasons why a bank would utilize an SBA guarantee. The deal might fall outside of a lender's credit policy. They may have, they're not particularly comfortable with a certain industry, or they don't have experience in a particular industry, or, even on the export side of things, a lot of times the export receivables that Donna mentioned, a lot of times lenders aren't going to give you credit for those. So that on its own is a reason for an SBA guarantee. And then of course, if your particular transaction requires longer maturities, SBA is a good fit for that. And then just general eligibility. Again, these are things just to make you aware. Borrower has to be a for-profit business, an operating business, or an eligible passive business. And that just means if the company has a separate LLC that's for real estate, that particular business that's associated with the operating company can also be eligible. Business has to be located in the US, owned by a US citizen or eligible non-US citizen, has to be a small business based on SBA's requirements. And those are typically based on the NAICS code. And it's either based on number of employees or revenue size. Owners must be of good character. So you're not under indictment for a crime, you're not in prison. Those types of things are what a lender has to look at. One of the big ones is any owners of 20% or greater are required to provide a personal guarantee. So I think that's an important thing to note early on. The business cannot be involved in any illegal activities, and there can't be any prior government loss or delinquent federal loan. So if you had a student loan back in the day that's delinquent, that would preclude you from SBA financing. Just in terms of eligible uses, what can SBA financing be used for? Well, I'd like to say it's really any legitimate business expense we can finance. And we'll get into a little bit more about the specific uses later on. So how does SBA define exporting? Again, this is directly from our standard operating procedure. A transaction that involves the production and payment associated with the sale of goods or services to a foreign buyer. Again, any goods or services must be shipped directly from the US to the overseas buyer. And then there's a concept of indirect exporting. So if you're a company that sells to another company that is ultimately exporting your products may be going into that company's product, you can qualify for the export loan programs as an indirect exporter. So it's just something to be aware of. And then the exporter must satisfy some other general rules. I think I mentioned already, they have to be located in the US. Loan proceeds have to be used by the US company. It can't be used, by an overseas subsidiary. And businesses have to be 51% US owned or a permanent legal US resident. One other thing I would note is defense and military related products or services are eligible for SBA support. And so here's a few things that would not make a transaction eligible. Things like, prohibited countries. And this kind of goes back to, Barbara's discussion about knowing your customer and, where are they located. You can do a quick search of the country on Exim Bank's country limitation schedule on their website. And again, if it's a country where the US is prohibited from doing business, obviously that's not going to be eligible. You're also going to want to look at, the OFAC website, and your banker will look at this as well. But again, you want to make sure that the people you're doing business with are legitimate. And then 2 NAICS codes are not eligible for support for the SBA's export programs. And those are 721, which is accommodations, and 447, gas stations. So accommodations would be more like hotels. And again, both of these may not qualify for export loan financing. They would qualify under standard 7A loan programs. And then importers, they don't qualify for our export programs, but they're certainly eligible for any of the other SBA programs. I do get a lot of calls from importers about that. So you are definitely eligible. So this kind of presents an overview of SBA's programs and services. The first one is, business intelligence for changing times. Again, these are advisory services, and you can go to SBA's website, and this is an area where you can connect with some key resource partners. We mentioned the STEP grant program, or Barbara mentioned it. This is something that I'll talk a little bit more about, but just a great program. It's a reimbursable grant program to help offset certain export-related costs. And then the financing for your international sales, I'll be talking more about our 3 programs: Export Working Capital, International Trade Loans, and Export Express. So on the advising side, SBA does have a fast track service. There's an email, an 800 number. If you're a business that's, you're struggling with some particular issue, the SBA can at least connect you with various resource partners. We do have experts in-house in Washington, D.C. that can help with trade issues, trade disputes. If you're looking to learn more about certain trade agreements, or even you have questions about your tariff codes, harmonized tariff codes, they can help answer those questions for you as well. So this is a really good resource that the SBA offers. Again, you may get connected with the U.S. Commerce Department, an SBDC for advising, or SCORE. So just a plethora of services and value-added services that are free for the most part for small businesses. So I always label the STEP grant program as our bonus program. In Maine, it's managed by MITSI, and they do a great job. And this is something where exporters can apply. You can go to the MITSI website for program guidelines and application forms, but exporters can be reimbursed up to 75% for eligible export-related costs. And you can see on the slide, there's several eligible expenses. It's not an exhaustive list. And again, the most popular use of the program is to help fund overseas trade shows or trade missions. But there's with the pandemic, I've seen a lot more uses for like website translations, website optimizations, and like product compliance testing is a big one. That's a costly expense for companies, especially if you're looking to export into the EU. And again, this program can help offset some of those costs. And it's up to $20,000 a year. So it's, it's meaningful for a small business. So I would certainly encourage you to go to MITSI's website to learn more about this. And I do have MITSI's contact information at the end of the slide deck. So this slide kind of just gives an overview of how the export loan programs can be used. Again, from a growth side, if a company's growing, they need some fixed assets to support that growth, some term financing, we can support that. If it's pre-shipment financing where a company received that big order, they got that $1 million order and they need to fund it somehow, that pre-shipment working capital is something that we can assist with. And then the concept of post-shipment, where a company that may carry a lot of export receivables, and now they just need some working capital support to fund that kind of receivable carry time, we can support that through our loan programs. So this shows the 3 programs that the SBA offers: Export Working Capital, International Trade Loan, and Export Express. The Export Working Capital is our flagship program. It's up to $5 million, so it can really, work with very small companies, but it can also work with middle market companies that have, larger working capital needs. And it's for the purpose of fulfilling, specific export orders. And these types of transactions are either asset-based structured or transaction-based, which is meaning looking at like a purchase order financing. And we can also utilize this program to issue standby letters of credit. So if you're receiving advance payment guarantees or you have a need for a bid bond, the standby letter of credit can be used for that purpose. And the line of credit that's established can be used to do that. The international trade loan, again, up to $5 million. I think of this in terms of it's a standard term loan. So as I mentioned before, if a company is growing, they've got longer term financing needs, maybe they need equipment, maybe they need some permanent working capital to support that new equipment purchase, or even purchasing a business is eligible. There's the financing terms are typically 5 to 10 years for equipment, and 7 years for, 5 to 10 years for equipment, and then for real estate we can go up to 25 years. On the international trade loan, an export business plan is required. So working with an SBDC counselor is a good idea. They'll help answer a lot of those questions that the bank is going to be asking you. In Export Express, which we'll go into a little bit more detail on, this is ideal for smaller companies that have smaller capital needs, and up to $500,000. It's very flexible, so it can be structured as either a term loan or a line of credit. It just depends on what the particular need is of the customer. And under this program, really what we need is an export questionnaire from the customer, and it's a one-page document, kind of a check the box, and it's a pretty streamlined process for both the borrower and the lender. And starting this year, the SBA has a new fee structure so that any loans of $350,000 or less have 0 SBA fees. Normally, there's a guarantee fee and a separate annual servicing fee. So you can see from this slide, for anything 350 or under, there's no servicing fee or guarantee fee. Typically the guarantee fees on SBA loans roughly in the range of 3%, 3.5%. So it's a significant savings. And that $350,000 and below, I think, is, meets the needs for a lot of small businesses. So Export Express, this is kind of just taking a little bit deeper dive into it. One program that can be used for several different purposes. So if a company is looking for standby letters of credit that I mentioned before, they've got an overseas buyer that's requiring a performance bond, a bid bond, or an advance payment bond. The line of credit under Export Express can be used for that purpose. Or a company's looking for working capital. They're a service company. They don't have a lot of inventory, but they still have working capital needs. That's a great use of this program. Also to support new export purchase orders. As I mentioned, it can be structured as a term loan. So if there's equipment needs or real estate, permanent working capital, and even business acquisitions can be covered with this. Export development costs. A lot of these you can see are, soft costs. So compliance testing, attending trade shows, website translations, those types of things. Those can be funded using an Export Express loan. I always like to tell companies, if you look at this list and you compare it to STEP, I would certainly apply to STEP to try to offset these costs before funding them using any sort of finance. And just in terms of approval process, the Export Express program is a delegated authority program, so the lenders have the authority internally to do the approval on their own. So once they approve it internally, it's basically, they're basically approving it on SBA's behalf. And as I mentioned earlier, there is a requirement that the borrower provide an export questionnaire with their application. I think I mentioned the maturities. Again, line of credit, 7 years, permanent working capital up to 10, equipment, generally 5 to 10 years, depending on the useful life, and real estate up to 25 years. So here's a couple of case studies. This is the first one. I figured, this will give you a better understanding of, a couple actual transactions and how they were, funded using an Export Express loan. So the first one is a small kind of TV production company. This is something that Camden National had done. And it's a company, it's a very small company. I think there's 6 or 7 employees. They provide and produce US documentary content that they provide to worldwide television audiences. And they've got a real niche in the European market. In this case, the company received a new order from a European customer. And, they just, while they don't have a lot of fixed assets or inventory, they certainly needed working capital in order to do the production and produce the content that they needed to do. They also had some need to finance some equipment that would help in the production of the content. And at the same time, they were looking to refinance some shareholder debt that was put into the business years ago. So the outcome was really a $100,000 line of credit under Export Express to support the working capital, and then a separate term loan that was used for equipment purchases and for some refinancing. That line of credit was also utilized to issue standby letters of credit, since the overseas buyer did provide advance payments, and they did require that standby letter of credit as a guarantee. And in this particular case, the company did utilize STEP, I think, on a few occasions, and one was to participate in an international trade show where they actually, did meet some good potential customers. This second case study, this is a food wholesaler and exporter. I would say a lot of the SBA's export loans, manufacturers and wholesalers tend to be the two primary uses or primary sectors that use the program. In this case, the food exporter received a significant order from a company, and it was, again, didn't really have the working capital in order to support that new contract. The suppliers that they work with, again, being in the food industry, the terms you get are typically very short. It's either, cash in advance or maybe up to 10 days. And now you're talking, shipping goods in a container. It's going to take 6-8 weeks to get there. So there was quite a working capital gap. And this is what the use of the Export Express line of credit was used for. In addition, to mitigate that repayment risk, as Donna talked about, the company obtained some export-import bank credit insurance in order to mitigate that risk. And I think they were able to achieve a 95% coverage on their receivable for that. So the outcome was the Export Express line of credit, and this particular borrower is also a user of the STEP program to offset some of those export-related costs. And then finally, I just have a listing of some of your local Maine resource partners for the grant funding. MITSI, of course, SBDC, Commerce is a great resource, and then the Export-Import Bank for the credit insurance needs for those export orders. And here is my contact information along with Brad Curry, who's the local international trade officer in Maine for the SBA. And, you know, we're always available to answer questions. And I always like to say, you know, we never want to hear of a company not being able to execute an export because they weren't able to get financing. Please give us a call, engage with us. You know, I'm happy to work directly with you and your lender to do whatever we can to try to make it happen. It's not always going to be the case, but I think, you know, we'll do our best. Thanks, guys.
Thank you. I'm gonna take the screen away. So what we've heard from the bank as well as Joe is there's a lot of questions involved and no one wants to be surprised, least of all you, right? So a lot of the international planning to begin an export business is to just understand some of the questions. And as we went over in the first session, there is in the normal business plan, you're gonna do some things to the regular sections, which we'll get into, but there's also a whole different section that we're going to address, right? That market selection section, which goes through all the different questions you're going to be asking yourself. In the first part of the series, we kind of got into some of the resources to help you answer. And then the second part again was Mitzi and what help they can give you. And the third part here was some of the financing that might be available. But for the first part, as we go back to that business plan, I'm going to give you this useful guide again that NASBite had provided to get you really to some of the questions that are involved. And I just gotta switch. So the elements of the international business plan. And I'm gonna briefly scroll through these because if you're just watching the video and you don't find it on our website or whatnot, then you'll have it in video and you can kind of pause the video as you want. But this guide that we have that was gotten from the SBDC, actually from another state, they let us borrow it. This goes through the different sections of a business plan and really gets you to some of the questions that you need to be asking yourself if you're thinking about starting an export business, right? It's a great way, as we in the first slide in series saw, it's a great way to diversify. It's a great way to extend your product's life. It's a great way to, you know, kind of ride out some rough bumps that might be in your home country as we're looking at inflation or stagflation starting to come up in the US especially. It's a great way to just increase your product demand around the world. So definitely worth looking at exporting. And as I said, there's a lot of different resources available. We'll get to some resources, but as I said, I'm just kind of going through this because if you're watching this, you can kind of pause the video if you don't have this actual document that you need. And in this document, there are a lot of different links that you can go through as well. And they'll be on the slides as well that I have. I'm just gonna go through the very end here. But the biggest thing is, and I think the bank would agree with me, no one wants to be surprised. So you'll never get to the point of absolute certainty, but what you want to get to the point of is where you feel comfortable, right? Let's stop that, and we are going to share the screen again with this. So definitely there are resources available, right? The Mitzi, SBDC, SCORE, SBA, Women's Business Center, and for every business, there's a lot of, like Maine is a jackpot, I always tell people when they're looking at resources to help them out. Not only that, the banks are so friendly in Maine. So definitely reach out to the banks. More than likely, they want your business. So they want to help you. They want you to succeed, right? No one wants anyone to not succeed. But part of that success is getting those questions answered. So be patient. It's not that we don't want you to be successful, it's that we do, and that's why we are asking the questions we are asking and getting the information that we need, right? The next slide here is a lot of the online resources. that we've used. The trade.gov has a ton of resources. I just have the main website, but if you drill down into that website, that is probably one of the most useful websites on here if you're looking at doing export trading. As I said, this will be on the slides that can be available, and thank you. But now just some general questions maybe for the bank and or Joe, the SBA. So one question I often get from clients who are looking to do an international business plan is how long, and this is hard because it does depend on each particular business and the industry and the size of the loan, but how long should someone plan as far as when they approach the bank, how long would it take to get financing in place, right? So we talked about, some things take longer, the letter of credit takes longer, and some things take shorter, but on average, let's say someone came to you and they had already worked with the SBDC, so they have a business plan in front of you. What would you, for planning purposes, give them for a time frame of, okay, expect it to take what?
Well, what we usually do, Peter, it depends on how complete the package is. So
Yep.
we walk through with the borrower everything that we'll need right up front. I call it the laundry list, which can be, it can be shocking sometimes depending on what we're looking at and the size of the loan. However, if we have a complete package, we're able to at least tell them, very quickly within days, whether this is, whether we're willing to move forward with due diligence. It appears that they'll qualify. Underwriting a loan typically takes a week to 2 weeks if we have a complete package. And, it may be approved subject to some things being done, but at least they'll know that they qualify with and I keep saying complete package because I know it's redundant, but customers and bankers look at things differently. So, what to us is a complete package, is just an annoyance. But we do provide that list right up front. So you know exactly what we're going to want to see in order to make a decision on it. And if we can't help, the best thing we can do is just give them a fast no, versus dragging it out. So if we have that package, it's pretty clear we can issue a term sheet saying, we're willing to move forward. That can be done in a matter of days, and then do a week to 2 weeks for underwriting. So, we can turn a deal pretty quickly.
Now, at what point would you want people to get the bank involved? Right?
Right at the beginning. Something you said earlier really rang a bell. We are more than willing to have somebody come in, even if they're not ready to apply for a loan, and just run things by us so that we can, number one, refer them to some resources if they don't know, if they didn't watch the YouTube video, and just run ideas by. I'm happy to. We call it a discussion sheet. Here's what we're thinking based on the discussion, and here's what some of the things that you as the client need to think about before moving forward. But we're always willing to do that. It doesn't matter the size of the loan, whether it's 17 million or whether it's 300,000. Happy to help a customer be prepared. I have worked with people that came in 2 years ago. They just weren't ready, and they touched base, and every 6 months or so, and then they're ready to move. And by that time, they have a great understanding. So not a bother at all, just to have a conversation.
Good, great. Yeah, thank you. Any final hints that you want to give people who are just thinking about exporting?
I would just add to Donna's comments on, I think Barbara had mentioned, all the questions that the bank is going to ask, right? I mean, again, working with an SBDC and getting that export plan together is going to go a long way to really impressing that lender and say, wow, this company really knows their business. They know what they're talking about. They know where they're going. And, there's going to be other questions you're going to have to answer. But I think what's also important is, the exporter kind of interviewing the bank and asking their own questions to make sure that's a good fit, because there are a lot of banks that, may not be familiar with the export program, may not have utilized it, and you'll get a very quick sense talking to somebody at the bank whether or not this is going to be worth your while. And maybe at that point, you need to start talking to other banks. So I think that's an important component here too.
Yep, certainly. And how would all of you say, should a business think about exporting?
Absolutely.
Why not?
Loaded question with this group, right?
Pays to diversify.
Yes, yes. As I said, one of the biggest benefits we can see immediately is if there is some kind of either economic or even a natural disaster in your home country, right? This will mean your market still exists elsewhere, right? So it's diversifying not putting all your eggs in one basket, so to say. Yes. Thank you. Thank you, Camden National. Thank you, SBA, for coming on and explaining the programs from the bank point of view and from the financing point of view. Very helpful. And when you put it all into that three-part series, I think now we have a pretty good understanding of how to get started, what resources might be available out there, and what resources there are for financing the deal as well.
Well, we appreciate the opportunity. Thank you.
Thanks,
Thank you,
Peter.
Peter and Joe.
Thank you all.
Take care. Thanks.